talk radio station in the Inland Empire. KCAA, the station that leaves no listener behind. Express 106.5 FM.
Live from the studios of KCAA AM 1050 in sunny Southern California, home to the dream of the California lifestyle, welcome to Julie Talks Money, where money is the subject, guest experts are our teachers, and financial literacy, freedom, and your lifestyle is our goal. I'm your host, Julie Phelan. Thanks for joining me today. So every week, my guest and I will bring you tidbits and a bunch of clues and secrets about how to make money, keep it, and double or triple it safely and legally, and also protect it. Whether it's the real story behind fixing and flipping a house, to the new tricks to technology that's changing our wallets, or how you can make sure you have enough money for your kids' college and for your retirement, you'll find fascinating and fun information as Julie talks money with experts in real estate, stocks, budget, assets, and big fat piggy banks, and talks with real people like you. So today I'm going to be addressing some topics we don't always want to look at, but that are a part of life. And if you're not prepared for them, you can really find your financial life changed in a big fat hurry. So we all want to think of the things that will happen to us during our life, but we think about it, usually we figure out we'll get around to thinking about it, right? And I'm talking about the 4 big Ds. We're talking about disaster, divorce, disability, and of course, lastly, death. The thing is that you have to do something about it now rather than just think about it, because even though we don't want to think that it's going to happen, it's possible, and certainly death is going to happen to you at some point. Then there's that other big D called debt, and unfortunately those other 4 Ds can put you into deep debt faster than you could even think was possible. So I've got 2 fantastic guests with me today who are going to talk to us about how to prepare for the 4 Ds and how it's possible to avoid big debt from them. Because let's face it, we don't want to work all our lives, right, to end up at the end with nothing, right? So we also need to have a few different types of strategies to work with, and sometimes the best people to talk to about that are other investors, which my last guest will talk about. But before we get to that, I always like to start out with some tidbits and some things that are about the market, perhaps, or fun facts. Today, one of the things that's been in the news a lot is that the jobs report came out for last month. And it looked really, really good. The economy added 263,000 jobs last month, which is, they say, the lowest rate since 1970 or 71. But here's the thing. Over 490,000 workers left the market last month, also left the labor market. And that could be because of retirements. It could be because of people leaving to start their own business, or maybe a network marketing company. Maybe they just decided to go live in Tahiti somewhere. But whatever it is, maybe they went after big dreams. We don't know exactly what the reasons are, but the fact is that the net is not as great as you might think. We've added some jobs, but also lost a lot of workers. So one of the things that impacts this is National Small Business Week. And you can get great deals on things from GoDaddy and PayPal if you are starting out building a website or a web store and you want to be an entrepreneur. MasterCard is actually even championing women's businesses, which is an awesome thing. It's a great thing. But here's the downside. If you're not going solo as a blogger, an influencer, or just trying to start your own business or network marketing, how are you going to find the workers that you need to run your business if the job market is this tight? There's going to be some wage pressure, but the main thing is, how are you going to find people? And in California, we are primarily a service economy. Most people don't realize that, but we're not a manufacturing economy. It is a service economy. So most of the jobs are in some kind of service, whether it's warehouse stocking, restaurants, retail, which has actually lost some jobs too. It might be that this is the time for you to actually get a really good, high-paying job, because you're going to have the job market is tight. Employers are looking for people. They're paying a premium for people. And this could be the time that you can get that job with the great benefits, the health insurance benefits, get the 401k with the 401k match, and then basically milk it for all you can until the cycle changes. Because what you want to do is have your nest egg all in place, and you want to be prepared for the next downturn or when one of the 4Ds hits you. You certainly don't want to be caught short. And I'll just give you a little reminder. The unemployment rate in 1970 was 3.9%, which is about what it is right now. 2 years later, the average mortgage rate was 7.8%, and by 1980, it was 18%. So we do work in cycles. Real estate works in cycles. The economy works in cycles. Your best strategy is to be prepared and to start now. So the two guests that I'm going to have today talking with us are going to be talking about the 4Ds. We've got a couple of attorneys. We'll be talking about asset protection and also be talking about different things you can do with real estate to protect your assets. Certainly one of the things with death and preparing for it is a super important thing and is a definite part of your financial strategy. You have to do that because you do want to make sure that you leave a legacy to your people, your family, whoever it is, even if you just want to have money to leave to your favorite college or some endowment. You have to have the money to do that, and you have to find ways to protect that. So we'll be talking with a couple of different guests about that, and then at the end, my last guest is a fabulous guy, and we'll be talking about the power of your network and the team, helping you to find the people that you will need to help you protect your assets, find the assets first, get them, and make sure that you're not going to lose them. Disaster can happen. I don't want to be a negative Nelly, but there are things in life that we just can't plan for. So we are going to talk about those today. When we come back, my first guest will be joining us shortly, and I hope that you'll stick with me. This is KCAA AM 1150, and I'm your host, Julie Phelan, and the show is Julie Talks Money. Stick with us. It's going to be a good show.
We all know money doesn't grow on trees, but you can grow your wealth every Saturday at 11 a.m. with Julie Phelan. Julie and her guests have a wealth of knowledge to help you gain more wealth. Your financial future can be bigger than your past. If you need to build fast cash or passive income or long-term wealth, each Saturday at 11 a.m. for Julie Talks Money, right here on NBC Radio, KCAA, 1050 AM, 102.3 FM, and 106.5 FM. And now on Alexa, play KCAA.
If you want to sell your home, any agent can put a sign in your yard. Which agent is going to actually sell your home for the most money? Well, it's Rudy Kasuma. Rudy will sit down with you. You agree on a price and a deadline. If the deadline passes and the home isn't sold, he will buy your home, guaranteed. If your house doesn't sell, Rudy will buy it as is for a price acceptable to you. Rudy sold a home in the San Gabriel Valley for $22,000 over asking price after only 10 days on the market. Call Rudy Kasuma now, 855-RUDY-SELLS. That's 855-783-9735. Or go to rudyhasthebuyers.com. That's rudyhasthebuyers.com.
And welcome back. You're listening to Julie Talks Money. This is KCAA 1150 AM radio, coming to you from California. We have the California lifestyle, and you can have that too, no matter where it is that you live. My first guest is Andrea Shoup, and Andrea is an attorney who lives and works in Temecula and the Murrieta area. She's had her own firm for almost 10 years, and she focuses on estate planning, trust administration, probate administration, and business succession planning. Because it's not just your personal life, it's your business life too. So you could say she specializes in 2 out of our 4 Ds, disability and death. Andrea grew up in San Luis Obispo County and got a bachelor's degree in business administration from Cal Poly San Luis Obispo, actually pretty close to Hearst Castle. Once out of law school, she worked as the deputy district attorney for the San Diego District Attorney's Office as a felony trial attorney. In 2012, she opened her own law practice and shifted out of that and into a specialization in estate planning. She takes pride in providing excellent and individualized attention to each client, helping them to understand every step of the process of protecting their assets and protecting their legacies for future generations. Welcome, Andrea. I'm so glad you could join me today.
Thank you so much. Thank you for having me, Julie.
No, it's my pleasure. So, as you know on my show, we talk about money and money issues, and getting it, keeping it, growing it, and protecting it, and especially when it comes to real estate, and of course, like your specialty, being able to pass it on. So, let me ask you first, what do you think is the biggest challenge to protecting a legacy and your assets for your kids?
I think making sure we plan for the unexpected. Life does unexpected things, and making sure that we have a plan in place and access and instructions for our family should life unexpected events occur. So proper estate planning, having the authorization and authority our family needs, and then also our instructions on what to do when something unexpected, either we pass away unexpectedly or we become disabled.
Okay, are those the two main things that you see when you talk about unexpected things happening?
Well, I see that families many times don't know how to address it. They're dealing with the challenges of the emotional part of what happened, and then they become frustrated when they're not able to act for their family, and they're not able to have the access they need. Staying out of court is so important, out of probate court, conservatorships, and so forth.
And that's so true, and I think in every state as well. I have a friend, I grew up in Chicago, and I have a dear friend who lost her husband last year. They were having breakfast, and he looked at her and he said, something's wrong. Something just popped in my head. I think I need to go to the hospital. And unfortunately, he had had an aneurysm. He was gone the next day, unfortunately. It was very sudden. He was fine one day, and the next day, basically, she found herself facing death, and they hadn't had the discussions beforehand they needed to because he was only 50. They thought there was plenty of time.
Right.
Fortunately, she didn't have issues with the hospital, but, that's not the right time to think about this kind of problem, right, and planning ahead?
Not at all. Many families and spouses find themselves in that exact situation, unfortunately, because it does sometimes happen unexpectedly. And what's really challenging, it sounds like he passed away suddenly. I've had widows come in, and now they have to petition the court just a mere week or two after their husband passed because their name wasn't on the house. Now they're having to go to court just to have the house transferred to their name. Maybe the husband had a stroke, and now he's in a coma or disabled, and the wife doesn't have access to refinance the house or sell the house because that needs the power of attorney that they didn't have because, they're young, they're 50, and it's not supposed to happen for decades down the road.
So what happens in a case like that? Does the ownership just happen in limbo, or what about joint tenancy or right of survivorship?
Well, if somebody passes, that's when joint tenancy or right of survivorship kicks in. But if a stroke happened, then unfortunately the wife does not have automatic access. That happened to a client of mine, and unfortunately she spent the last 7 months of her husband's life petitioning to try and get conservatorship over her own husband to sell her own house. Unfortunately, it happens frequently.
My gosh, 7 months. Did that take a huge toll on their finances?
Oh, completely. And it's the finances, but it's really the emotional drain. She's dealing with her husband who had that unexpected stroke, and now she's helping him and trying to provide for him the care he needs and struggling, going to court. I think she went about 5 or 6 times. She never got conservatorship. He ended up passing away, and she lost the house.
Oh, no. That's awful.
It was devastating.
Awful. How often do you find it's the other way around, where it's the woman who has a stroke and the man, or something happens, you disable them, and the man is having to deal with the things too? Is it the same kind of situation? Maybe not ownership in the asset, but...
Exactly. It's the exact same thing. Property ownership is the same for men and women, husbands and wives. So if it's the same situation, sometimes wives are the only one on title, or if the wife is the one who became incapacitated, the husband still does not have access to or ability to sign on her behalf without the necessary documents. So it's important to have proper estate planning, make sure that it's done early, make sure it's done well.
Well, what happens if it's not something where it's a sudden death, but they might need surgery, but they're incapacitated or they're not able to give consent?
Yep, that happens also. Many times, husbands and wives will have ability to make medical decisions. It will become a very big challenge, especially in the situation of blended families, where maybe husband has his own has children from a different relationship, and they might have ideas of what should or shouldn't happen to their father. but husband's new wife has her own ideas, and when there's a challenge, unfortunately, now we're in court fighting over who gets to make those decisions, and that's where it becomes, again, devastating. The family's suffering from the emotional toll of the situation, husband or father being in the hospital, facing that surgery, and now we're fighting about who's going to make those decisions.
Well, what about the medical decisions? I mean, you can't spend
Yep.
a lot of time in court arguing about that when somebody needs care, right?
You're right, and that's where it becomes a devastating challenge, having to get in court immediately to have a judge decide.
Well, what can they do in planning ahead to make sure that they're able to make those decisions or talk to doctors or avoid those kinds of court things?
Planning ahead, getting the documents in place beforehand. So estate planning really is providing access and instructions for when life's unexpected events occur, either disability or death. There's several different documents, so trust, wills, powers of attorney, advanced health care directives for those medical decisions. When you have those in place, you're giving not only access to the person you decide will make those decisions for you, but you're also giving them instructions on what to do and what your wishes are. That's why it's so important to have that estate plan. The estate plan's the umbrella term for those documents within it, the instructions and the access for family or whoever we choose to act for us.
So that can be a whole package of different things, right?
It is.
If you had to tell somebody right now the most important things that they should do right away to protect themselves, especially if they own their own home with somebody or by themselves, what would you recommend?
Avoid court. Get the documents
what?
you
I'm
need.
sorry?
Avoid court. Avoid having to go into court.
Avoid court. Okay.
Yes. Mm-hmm. Because when we have those documents, there's not one single document that is the key document because each situation requires a different tool.
What about, we're talking about in a hospitalization, wouldn't they want, you mentioned an advanced medical directive?
Yes.
On a power of attorney?
Advanced healthcare directive is a power of attorney for medical decisions as well as instructions for medical decisions, and a financial power of attorney is for financial decisions. Both very important.
Okay, when would they kick in? When would they start? Like, obviously, if somebody's in the hospital,
right.
They need to talk to either the people at the hospital who are going to be charging you on the outrageous medical bills, right?
Right.
So, but also being able to make other decisions and plans. Do you have to have that with you? Do you have to present that to a hospital? I mean, how does that work?
You do. It's a good idea. If you have it, make sure you already let your doctor's office have a copy of it. Have it on file with your doctor's office, and then have it available to the hospital. Bring it with you. You know, I have my clients, sometimes they keep it in their glove compartment box of their car, especially if there's many medical issues going on in the family.
Okay, great. Well, what about, what if somebody has the need for a rehab hospital or something like that after their stroke or after surgery, and they have to maybe go into a rehab hospital or some kind of an assisted living thing, and if they can't work, what can you do to help them either have necessarily income coming in or protect them or somebody else being able to pay those bills and make those decisions too?
The ability to pay bills using their own money would come from the power of attorney or from a trust document. That's where that has the access and the instructions for someone to pay money to the care facility out of their own money. You mentioned a rehab facility. There are ways that there's planning that can be done to get government benefit assistance if the person qualifies for that. It's some planning that we're able to do.
Well, don't they kind of have to wipe themselves out of all their assets to get the government assistance?
You know, that's a pretty common misconception. We're able to help the family preserve the assets without wiping out their assets. I hear, we have to spend down and do this. No, you don't. Please call me beforehand. We can do some pretty amazing things to help preserve the family assets and qualify for the benefits.
Yeah, I always have heard that you have to spend things down until you get your very last share, pretty much, before you qualify for government assistance.
Yep, there are some planning techniques available to be able to do that.
Well, I personally am a strong believer in long-term care policy because life does happen, and I understand that they say that the greatest number, percentage-wise, of the need for a rehab hospital is like between age 40 and 60. whether it's a car accident or maybe it could be a small stroke. Would you
Right.
would you agree? Do you see that in your practice?
I do. Care is needed throughout all the ages. It's not just for somebody in their mid 90s. You're right. Car accidents, strokes, so many things will hit a family they need care beforehand, and those government benefits aren't available. And that's where planning ahead, having the long-term care benefits, the what financially providing for that or planning for that is so necessary for families. That will devastate a family. It's very challenging for the husband who has, husband and wife have worked their whole life, and they're nearing retirement, and now wife has had a stroke, and husband has to decide, do I use that retirement that he knows will be needed for both of them should she survive, to pay her bills now?
Mm-hmm.
I think the average nursing home care in California is about $8,200 a month, and that's the average in
Wow.
California. I've seen care bills, $10, $11, $18,000 a month.
We're going to be talking about that in another show because it can be its whole topic. But you did mention trust, and before we go, I want to ask you one question about that. You really hear a lot about people taking title in a trust,
Yes.
And it's revocable trust or irrevocable trust. Is that something that helps to protect the asset?
Absolutely. A revocable trust means that the people creating it retain complete power and control over their own property. Setting up a trust is one of the top ways to avoid probate, avoid problems during incapacity or passing, and it's a way to protect the assets after passing. And it's not just for the extremely wealthy. A trust is needed for any property owner. Any real property owner should have a trust, and its assets other than real property are over about $150,000. If
Wow.
not, then the family's going through probate if they pass away. A trust is for everyday people. It's not just for the elite, 1%.
Oh, that's great to know. If people want to get in touch with Andrea, they can contact me at Julie@JulieTalksMoney via email or call at 323-252-1027. Andrea, I really appreciate you being on the show today and talking about your practice, and hopefully we'll be in touch with you and talk to you again in the future. It's been fantastic information, and I really do appreciate it.
Thank you
Thanks
so
so
much.
much.
I appreciate the opportunity.
You bet. Thank you. So you are listening to KCAA 1150 AM, the radio in the heartland, and Julie Talks Money. My next guest will be coming up shortly. We're going to take a little break here and come back and talk to you in just a couple of minutes.
We all know money doesn't grow on trees, but you can grow your wealth every Saturday at 11 a.m. with Julie Phelan. Julie and her guests have a wealth of knowledge to help you gain more wealth. Your financial future can be bigger than your past. If you need to build fast cash or passive income or long-term wealth, each Saturday at 11 a.m. for Julie Talks Money, right here on NBC Radio, KCAA, 1050 AM, 102.3 FM, and 106.5 FM. And now on Alexa, play KCAA.
If you want to sell your home, any agent can put a sign in your yard. Which agent is going to actually sell your home for the most money? Well, it's Rudy Kasuma. Rudy will sit down with you. You agree on a price and a deadline. If the deadline passes and the home isn't sold, he will buy your home, guaranteed. If your house doesn't sell, Rudy will buy it as is for a price acceptable to you. Rudy sold a home in the San Gabriel Valley for $22,000 over asking price after only 10 days on the market. Call Rudy Kasuma now, 855-RUDY-SELLS. That's 855-783-9735. Or go to rudyhasthebuyers.com. That's rudyhasthebuyers.com.
And we are back, and welcome back to KCAA 1050 AM radio. This is Julie Phelan, your host of Julie Talks Money. We're talking about the 4 Ds today: debt, disability, divorce, and disaster, and how to prevent them from wiping you out. This could be whether you have real estate, whether you have stocks, assets. There's all kinds of different things that you need to do to make sure that everything that you have worked for all your life is still there when you need it in retirement or older, or when you just have enough and you want to enjoy life, have a different lifestyle. So my next guest is Carl Zellner, and Carl's an attorney with Anderson Advisors. Carl himself is out of Texas, and we contact him or talk to him because we do things all over with real estate deals, and also there's a whole lot of things that apply to everybody. Anyway, Anderson Advisors is a firm of attorneys and CPAs, and they're working together to help their investor clients grow and, more importantly, protect and use their assets, whether they're stock portfolios, real estate, retirements, accounts like IRAs, or qualified retirement plans. I'm sorry. Welcome, Carl. Thanks so much for joining me today.
Hey, Julie. Thanks for having me.
Appreciate that. Now, how's the weather where you're at?
Good. I'm actually at an event this weekend in Branson, Missouri. So my wife's back home at our house in Las Vegas. So I'm enjoying some of the cooler, breezier weather out here in Missouri, and even getting a little bit of rain. But doing good.
Oh, that's great. I think I told you I'm a former resident of Kansas City, and I'm an investor in Kansas City, and so I love that whole area of Missouri. It's just beautiful. It's beautiful.
Yeah, Kansas City is a great market.
It is. Well, tell us a little bit about yourself and how you ended up doing what you do.
Well, so when I graduated from undergrad, it was in 2007, and the market was, as everybody remembers, a little bit tough. So I actually got into the bar and nightclub industry starting out, and got tired of paying attorneys that weren't doing a great job. So I decided to become one and cut out the middleman.
That's a good plan.
Always had a lot of interest in real estate. Actually bought a house while I was in law school, renovated it. And turned a nice little profit by the time I graduated. And I actually chose to live in it as well because there's some tax advantages for living in a house for 2 years. So I was able to take what's referred to as the 121 exclusion on my capital gains and walked away with a tidy little profit. Shortly after law school, I hooked up with Anderson Advisors and found a great home and been with them ever since. And they always like to joke around. They got me before I had any bad habits. So.
That's pretty funny. And do you still have more property, or do you continue to do that renovation and selling?
The one I did in Texas, I've sold, and then I bought my house in Las Vegas. I'm actually starting to look at doing more investing in portfolios of properties versus one at a time. So I'm kind of building up my bank reserves and looking to do that here in the future, and working with maybe opportunity zones or qualified opportunity funds.
Oh, that's great. I love it that you are actually one who is doing what they're talking to other people about, as opposed to merely advising without any real personal knowledge of it, whether it's flipping a house or fixing it up, or actually the benefits of real estate investing and how to protect it. And I love your slogan, too: preserve, protect, and prosper. Because that's what we're all about, too. So,
absolutely.
I understand that you can set up a turnkey asset protection structure using LLCs and land trust. Now, I have a whole lot of people who listen, but they don't necessarily understand what a land trust is and the difference between a land trust and a trust, like our previous guest was talking about, which is more like an irrevocable family trust. Can you tell us a little bit about a land trust and how we'd use that?
Yeah, so land trusts are pretty neat little tools that have been created. And land trust is basically just for lack of a better term, a marketing term. So there's a couple different flavors of trust, as I believe the first guest talked about. There's revocable and irrevocable. Land trusts tend to generally be revocable trusts. Their usage for real estate is they're a title holding vehicle, meaning that's the name that's going on title of the property instead of, say, an individual's. What's really neat about them is that normally when you title a property in the name of a trust, the trustee's name shows up on title as well. But you do have the option or ability to use what we term as a nominee trustee on there, so that your name does not show up on title at all. So a lot of folks that out there that may be looking at setting up a land trust online or something along those lines, it comes with quite a few little nooks and crannies you got to be aware of. And also, you'll find a lot of companies out there may nickel and dime you when you set one up.
Well, let me ask you this.
Go ahead.
What's I talk to people about land trusts, and they think that they're illegal in California because they don't know about them. And they all tell me that they're gurus or mentors tell them, oh, no, you need to start an LLC, open an LLC. That's what you want to do to buy your property. And I think some of that's because they don't necessarily know about land trust. How would you tie the two together? What would you say about doing an LLC, especially here in California?
So LLCs are great. Excuse me. The problem with LLCs in California, though, is for all of your California listeners, comes with an $800 fee every single year. Land trusts don't generate that fee, but I would still suggest setting up an LLC, meaning you can set up an LLC in another state that can hold the beneficial interest of the trust. Now, referring back or coming back to my original point of there's some, details that need to be done so that you're not unintentionally triggering some, Prop 13 reassessment in California, or in that you want to make sure that the filing's done correctly. And also you got to make sure as well that you're tying it to an LLC that's appropriately situated for it.
I'm sorry to interrupt, but if you're doing a trust in another state, then how can you still avoid the California franchise tax board, or the fees that you have to do in registering the corporation?
So for the land trust, if it's in California and it's pointing to an LLC out of the state, that LLC would need to be disregarded for tax purposes. And for the tax purposes means it's just going to fall directly onto your 1040, just like you were individually owning it. Meaning you're getting around certain things because what California can see versus what you're doing. So for most of our California clients, what we're looking at is, especially if we're looking at a rental property portfolio, meaning multiple properties, is that you're going to have a corporation in California. So you will give them your pound of flesh with the corporation, and that corporation's the one that's taking the funds from the renters and remitting them back to the individual. So like I say, there's some moving pieces, and it's different for every investor. But for those that are trying to avoid that transfer tax, that franchise tax, there are options available. But you do have to take into consideration some things. If I was just living in California and say maybe had one or two rental properties, then you know what? That LLC, that $800 is just the cost of doing business. It may not justify setting up a large entity structure or paying, the annual fees for the entity structure. So we need to actually look, in most cases, at the individual's need. But from a broad perspective, LLC does not have to be in California.
And what about
California? Go ahead.
What about liability? I mean, how does that protect you? Because, when it comes to your investment properties, personal liability can be big. Single-member LLCs are not that great because they can be pierced pretty easily. But it sounds like you can sort of, if you have a land trust, people won't necessarily know that you own the property. Does that help to minimize liability and your exposure?
So by not having your name on title, it does a couple things. Number one, it's somewhat of a smokescreen, and that's going to be very difficult to find who owns the property. Number two is, though, that's why we have to attach it, or the beneficial interest, to an LLC in, say, Wyoming, and so that you have that full measure of protection. So if we play out the scenario, something happens on a property, gets sued, somehow they find the owner, and now you present that assignment of beneficial interest, which shows the Wyoming entity is the owner, or the owner of the beneficial interest. Now we're looking at, if there's going to be a case filed, you now have to file it against the Wyoming entity, which would then, now we're talking about a multi-jurisdictional case, which basically becomes more expensive to the plaintiff and defendant if they choose to proceed. Yep, and the ultimate idea is that the more complex you make it, once those dominoes start to fall, or as, say, a plaintiff's attorney is digging in, the more costly it becomes to start pursuing a case.
So if I have somebody who wants to go after me, and I have a property in Kansas City, but they don't really know that I'm owning it, or they think they do, they have to go through a whole lot of stuff, long distance, right, and across the country to try and find out and maybe get their hands on it. That's probably not worth it to too many attorneys, I would think.
Correct, and we got to think, and also as well, we got to take into the consideration the kind of global perspective. Who are your tenants? These tenants are not going to be, paying a high-priced attorney, $700, $800, $900 an hour to pursue something that the attorney can't see or have no end in sight, or paying, $20,000, $30,000 retainer. Most cases, we're talking about contingent fees where you would be hiring an attorney and the attorney would get a piece of the ultimate judgment.
Right. How else do you protect the assets? Because I understand that you guys do a lot of stuff, and you can put properties into asset accounts or IRAs or retirement accounts, and work with the CPAs that are in your firm also, so that you can minimize the taxes. Is that am I understanding that right?
Yeah. So there's lots of different strategies we can work on with taxes. The nice thing about the tax system is that with somebody who knows what they're doing, we can choose where income lands. Meaning, for a lot of our clients, they have corporations or they have disregarded LLCs. Rental property or rental income is pretty close to about the best tax treatment you can get on income, meaning that it's classified as passive income, which doesn't come along with that 15.3% or the 14.13, technically, I guess, if you adjusted it, self-employment tax. So rental properties are pretty good from the tax perspective, but yeah, you can absolutely buy properties in your retirement accounts, whether that be a qualified retirement plan. And when we say qualified, we're talking more of your 401ks, solo 401ks. If they're qualified under ERISA, which is a federal guideline, or you can do it in an IRA. My preference is usually qualified retirement plans, though, because you do offer a little bit more flexibility in that you don't need to deal with a custodian. So meaning if I find a property on a weekend that I want to buy, I write the check as the trustee versus having to go through the process of speaking with, my custodian, having my custodian sign off. And now, it's been 3 or 4 days and maybe somebody else already bought the property from out.
I know what you mean. Oh, I've got a self-directed IRA, and I think that those are really good things to have. But it can be time-consuming. You have to wait, and you have to go through all these different procedures because they have to for the compliance parts, right? And I'd love we can talk again at another time also, because all these different things, again, are part of this stuff you can have a whole show on. What is your website?
So our website is andersonadvisors.com, and I would encourage your audience to look us up as well. We also have a podcast, which is free. You can find it on all the major platforms, as well as Toby Mathis, one of the founding partners of Anderson, does Tax Tuesday every single week. And it's free as well, and folks just log on, and they can ask questions, and he answers questions on the fly, and you have the ability to submit them, and we'll answer them as well. So
that's great, and I look forward to a time too we might be able to present a seminar together and stuff out here in California, because I think you have an awful lot of interesting things to talk about. I know you can leverage funds for real estate, and you can borrow from your own plan or from your IRA, and you can talk about that. I have seen something very interesting about being a landlord of your stock portfolio. That would be really interesting to talk to you about at another time. But I love the fact that you guys combine both protection as well as minimizing taxes, because that's one of the things that I really believe in. And we all know that maximizing your cash flow is for reducing your expenses, increasing your income, and minimizing your taxes is one of the biggest ways that you can knock down your expenses and increase your income, right?
Absolutely. And it's all, and like I said, all individualized as well. It all depends on the tax appetite and where we're looking and how we're doing it. But I mean, there's so many tools out there, and it's really about finding and from our firm's perspective, it's really about finding what the client's need is and then finding a strategy that works for them and understanding that strategy can change in the future as well. So
that's great. That's wonderful. So if any of my people out there, my listeners, have some other questions about it, you can email me at julietalksmoney@gmail.com. Let me say that because that was confusing. Julietalksmoney.com. Actually, that's the correct one. Julietalksmoney.com, and you can ask for information about Carl and give you that website and web information. I really appreciate you being with me here today, Carl, on Julie Talks Money, and look forward to talking to you again in the future at some point.
Absolutely. Thank you for having me, and I look forward to being on again next time.
That's wonderful. You have a great day out there in Branson.
All right. Thanks.
Okay, you bet. You're listening to Julie Talks Money on KCAA AM 1050 radio. And my next guest, you're really going to enjoy him because he's been in the real estate business for years and years and knows more, like the expression is, he's probably forgotten more than most of us will ever know and learn. When we come back, we'll be talking with Steve Love, who runs the real estate investment club Prosperity Through Real Estate and has been in the business for a long time. Again, this is Julie Talks Money, KCAA AM 1050 radio in California, coming at you. live in the studio. Stay tuned. We'll be back in just a little bit.
We all know money doesn't grow on trees, but you can grow your wealth every Saturday at 11 a.m. with Julie Phelan. Julie and her guests have a wealth of knowledge to help you gain more wealth. Your financial future can be bigger than your past. If you need to build fast cash or passive income or long-term wealth, each Saturday at 11 a.m. for Julie Talks Money, right here on NBC Radio, KCAA, 1050 AM, 102.3 FM, and 106.5 FM. And now on Alexa, play KCAA.
If you want to sell your home, any agent can put a sign in your yard. Which agent is going to actually sell your home for the most money? Well, it's Rudy Kasuma. Rudy will sit down with you. You agree on a price and a deadline. If the deadline passes and the home isn't sold, he will buy your home, guaranteed. If your house doesn't sell, Rudy will buy it as is for a price acceptable to you. Rudy sold a home in the San Gabriel Valley for $22,000 over asking price after only 10 days on the market. Call Rudy Kasuma now, 855-RUDY-SELLS. That's 855-783-9735. Or go to rudyhasthebuyers.com. That's rudyhasthebuyers.com.
And welcome back to Julie Talks Money. This is Julie Phelan, your host. And this is where we are talking about money and the ways that you can grow it, get it, and keep it. Stuff no matter where it is that you live. There's so many different things that we don't know about, and some that we don't even know that we don't know. One of the things that everybody talks about, though, is the value of their property and is about real estate. And that's one of the things that I have been in love with for a long time. My next guest is one of my influences, I would say. His name is Steve Love. He has run an investment club called Prosperity Through Real Estate for a number of years, and he knows probably every expert out there and every guru who could ever tell you about any technique that there is in real estate. Steve, I'm so glad you could join me today. Welcome.
Well, thank you so much for having me, Julie. As you know, you're one of my favorite people, and we've got to know each other pretty well over the past several years. And it's kind of exciting being back on the radio. Once upon a time, I had my own radio show, but gosh, I take my hat off to you. You're a big commitment of time and effort, and
oh, you're so nice, and thanks. But, you know, I can do it with the support of people like you. And stuff.
I'll always be here for you.
That's great, because you are one of my resources. And wouldn't you say that having a lot of resources available to you in the form of people is one of the most valuable things that you can have in real estate or any other kind of investment endeavor?
You know, I've heard it said many times, and I think it's true. It's not what you know, it's who you know.
Mm-hmm.
Okay? Why? Because if you know the right people, they can give you money. They can give you deals. They can be JV, joint venture partners with you. They can inspire you.
How long have you had this, and why did you decide to form a club?
We've had our group Prosperity Through Real Estate here in Los Angeles, I think 16 or 17 years. And then about 3, maybe 4 years ago now, we started one, or we acquired one in Las Vegas. So we go over to Las Vegas every month, too, and I love Las Vegas.
Why Nevada? I'm curious about that.
It's a fun town. Well, there was a couple of reasons. The main reason, one of our friends actually was the founder of the group in Las Vegas, but he lives in Florida. His name's Chris. And it was such a hard commute for him from Florida every month to come out to Las Vegas.
Imagine.
He didn't really want to do it, so we took it over. And we have friends out there that we can stay with, so when we go out, we don't even have to bother with the hotel. And I love to fish out there, and I hope I'm not giving any secrets away here, but Robin loves to play the penny slots out there.
Well, it's a pretty good market, too, isn't it?
She
for investors?
usually loses $20 and quits, but last time she got up $400. So,
on the fishing? Wow, that's pretty good.
Still, that's not the kind of money we talk about in real estate, and,
right.
and it Julie talks
money.
Money. That's the name of the program, right?
That's right. That's right.
Yeah.
Well, tell me about the Las Vegas market. What is it that you're seeing there? You obviously have people who are actively investing there because they live there. Do you have some of the people from your California groups also investing out there?
The Las Vegas market kind of is like the LA market. It tends to mirror the LA market to a certain extent, in that it goes up and it goes down. Where some places across the country are much more steady. They don't go up very much and down. But LA, California as a whole, and Las Vegas will take big jumps up, and unfortunately, then sometimes they go way down. And so you need to know what you're doing when you're in these markets. And we're a business of niches. Some of us like to buy and hold and rent out. Others think that's terrible. They will only flip properties by fixing them up. Others like to keep hands off altogether and wholesale. Others do land, others do apartments. But we're all these niches.
Mm-hmm.
And so...
And I know that you are...
I think you start with a niche, learn a niche, become good in that niche, and then, then you can venture out into others.
Now, I know that once you complete, or the people who are out there, and they complete a course in real estate, whether it's from one of the national gurus or the ones that charge $10,000 or $20,000 or $30,000, even the local ones who are different groups, they always recommend going to a real estate investment group or finding one that's local and joining it, because there are so many people who can help you find those niches or learn more about them without just buying some course and sitting on your computer trying to learn it on yourself.
It's pretty tough that way, just trying to learn it by yourself. And you mentioned a couple of things there that I'd like to address. One is, why go to a RIA group? REIA stands for Real Estate Investors Association, and we run these too in LA and Vegas. And the reason to go is, the main reason to go is for education. But also, real estate can be kind of a lonely job. I mean, you're at home, and you're listening to videos, or you're watching, when you're first learning, you're usually getting some education, you're reading some manuals, and maybe your spouse doesn't care, maybe you don't have a spouse. It can be a lonely thing. So we want you to go to these meetings every month, or even more often, and network with other folks. And just doing that will inspire you. And, of course, the education is incomparable. I mean,
yeah, I agree with that,
too. In our case,
too.
we get the top trainers across the country, and that's pretty much all we get. Is the top trainers.
Now, there's some deal making that goes on in your club too, and I know that you have actually paid some people for decent leads, and you have, I don't know, how many people are in your group anyway?
Gosh, you'd have to ask my wife, Robin. I mean, on our list, we've built it up to several thousand over the years. How many are actual members? I couldn't tell you.
Well, I know that's a constantly changing group that comes in. People that come in depending on who it is that you have as a trainer. Or if they have a deal that they want to present to your group, or they are looking for a lender or something.
Exactly. We do something called haves and wants, where you can come and you get 30 seconds in front of the whole group to say what you have. Maybe you have a deal you want to sell, or you have a deal you want to get funded, or you need something, you want something like money to fund my deal, that kind of thing. But before we go on, Julie, I want to address something you said earlier about if you take a training. And by the way, I think we should all get educated, because if you don't, you can lose a lot of money.
Yeah, you're gonna pay for it one way or the other, right? And the training or in the losses. So I agree with you. Education is important.
Believe me, I totally believe in training. I mean, but I don't believe in some of these things that are sold now that cost $30,000, $50,000, $100,000. It doesn't take that much for education. I mean, I went to the University of California, and I spent more than that, and came out with,
yes,
nothing really. Couldn't get a job in my field, but that's a long history now. But you should get some training, and it's even okay to get a mentor. But these high-priced things, I personally don't believe in, and I don't know of anyone that's ever taken one that said, that was a good deal, I'm glad I spent $50,000.
Yeah, well, I think you can spend $50,000 and buy a house, and I know that you can do that in lots of different markets around the country. You don't have to always invest in California. And
hey, you give me $100,000, and I will show you where you can go and buy 10 free and clear houses and get a really good cash flow and return on your money.
Absolutely. If people wanted to check with you, how would they reach you as far as the website's concerned?
They can always go to our website. They can even call me. Our website's prosperitythroughrealestate.com. And our phone number is on there. You can always call me. I'm always glad to talk to investors. You can always run, if you're thinking about going with some particular trainer or niche, you can get my feedback on it.
And of course, I have a direct connection to you. So if people want to call me or email me at julie@julietalksmoney.com, then I can have them connect to you also.
Sure, my phone number's open.
And that's good.
If you want to give out mine, that's fine.
Hey, listen, I want to ask you just real quick, because we are talking about the 4Ds, and disaster is one of the things that can definitely happen in a real estate investment or a transaction or some kind of a deal. And we have seen them ourselves. Like we were just talking about, you can either, learn the hard way through the school of hard knocks and losing money, or through liability issues, or you can get trained. So one of the things that I think is valuable with the meeting like that is you can actually talk to people who have done it, who've been in the trenches, and who have some horror stories to share, or who have some tips that are really big and valuable tips of what to avoid or what to do to protect yourself from any kind of a disaster. Do you have any personal stories that you could share, or do you know of anything that anybody else may have told you that was a problem? Because I know that there was one of the people that came to one of your clubs, and she said that she had a client who was flipping a house, and he just hired some people. One guy fell off a ladder, broke his back, and the next thing you know, she was on the hook for all of his medical because she was considered his employer instead of just somebody who wanted to flip a house. I mean, that could be pretty serious.
Why get trained to hire the right people with the right type of insurance, and you should have the right type of insurance and stuff. But you'll always run into people that, and I don't want it to scare anyone off here, but like during the last downturn, and you'll always run into people that say, listen, whatever you do not get into real estate. My brother-in-law had a rental house, and they wouldn't pay the rent, and he had to evict him, and he lost all this money. And you'll always find horror stories like that. But if you do what we teach, and you keep 3 simple rules in mind, and I tell all of my associates and students and attendees, just keep these 3 rules in line, and you will not lose money. Number 1, you don't have to spend money for real estate. What? But that's true.
What?
Don't. You can spend money, but we recommend you don't spend money on real estate. We teach how to buy real estate with no money or credit. Number 2, don't use bank loans. Because rule number 1, if you don't spend money, you can't lose money. Number 2, if you don't use bank loans, you won't have the bank's coming after you, and you won't lose your credit. Number 3, don't make promises you can't keep. If you keep those 3 rules in line, there won't be any horror stories. But especially during the last downturn, things went down so fast here in California that sometimes as you lowered the price of your house, the market was falling faster than that, and one couldn't keep up with it. But if one does it right, like one of my friends, who I think you know too, Mike, Julie, during the last downturn, his cash flow went way up because he wasn't flipping during those times. There's a time for flipping, but just you need to know the flipping is when you buy a house, rehab it, and sell it for a profit. There are times to do that. You just have to go by certain rules.
Well, and I think also everybody that we've talked to, and if you look at different publications, say that we might want to be on our toes for a potential downturn now, or at least a change in the market. So, again, I would highly recommend that people go to your club or to other clubs, too, around, because that's where you're really going to get the information from the people who are doing it on, is this a time to flip? Is it a time to buy and hold? Is it a time just to buy? Because it could be that some really good deals might be coming down the pike.
Well, Julie, I believe you're bringing up an excellent point, because I believe it's always a good time to buy real estate. But
I agree.
Techniques will be different.
Yep. Well, we're going to have to cut this off. We'll have to continue this another time, Steve. I really appreciate your time. Thanks so much for joining me here on Julie Talks Money. I'd love to talk to you again, and of course, I look forward to seeing you here in a couple of weeks. Thanks to everybody, for my guests, Andrea Shoup, who's an attorney here in Temecula, and Marietta, and she'll talk about and help you out with estate planning. Carl Zellner, who can help you out with any kind of tax planning as well as asset protection in all the states in the country. And Steve Love, who definitely recommends, as I do, joining in with other groups and real estate investors, talking with other ones and networking, because it can be a lonely pursuit, but also it can be a wonderful thing if you have a good power of a team. And all these people I'm hoping you'll put on your team at some point, in some way. Doesn't have to be my guest, but these different fields. So thanks again for joining me on Julie Talks Money. Hope to hear you or see you next week. This is KCAA 1050 AM Radio, and I'm Julie Phelan. You can reach me at julie@julietalksmoney.com. I look forward to talking with you again next week.
Your NBC Sports Radio update starts now.
It's the first Jewel of the Triple Crown. I'm Brian Weber, getting closer to the 145th Kentucky Derby. Post time 6:50 Eastern. You can catch pre-race coverage on NBC Sports Radio, see the race on NBC, and hear it on Westwood One. With early favorite Omaha Beach scratched this week due to throat surgery, the field could be wide open with a forecast that calls for an 80% chance of rain at race time. Maximum security, the current favorite at 9-2. Tonight, second round of the NBA playoffs, pivotal Game 3 between the Warriors and Rockets at Houston at 8:30 Eastern. Warriors trying to open up a commanding lead of 3-0. Steph Curry will play despite the finger injury he suffered in Game 2, sharing his playoff mentality.
Defensively for us is where we're going to